Good afternoon. This is Connor with 0DTE Traders here to present our market minute for July 26, 2024. It is 11:40 and the SPX is trading higher, up 1% to 54.55. Although much of this move did occur in the pre-market with a gap up, nonetheless, we are holding up quite well as volatility contracts, VIX down 9%. This is an exacerbating factor, so if vol continues to remain sold, it will support the upside, perhaps a positive drift scenario, or at minimum limit the downside. Conversely, if volatility troughs, right, we get that rebid in vol, it would be an exacerbating factor, and vol can really pick up on the downside. But it is looking like the market is fairly supported today. Now, we are still below the flip in negative gamma. Flip today 54.95, so you still want to be a little bit cautious. We could see more volatility, but it is looking like a bit of a calm day, some digesting the recent volatility. I mean, yesterday we bounced off that put wall in the early morning of 5,400, 100-point up move, and then essentially a midday reversal off 5,500 to close at lows more or less, right? Nearly a 100-point move back down, and then not to mention the day before that, SPX closing down 2.3%, which was essentially the worst closing day, I believe, since April 2023. So absolute carnage there. But markets are holding up quite well today. Now, what can we expect in terms of upside? The next resistance zone is going to be the implied high at 54.70, gamma resistance at 54.75. A break above that opens the door to the flip, which is our transition back to positive gamma. And that sits at 54.95, followed by 5,500, which is a quite sizable level. Now, in terms of the downside, there is a gap to be filled. This is today's gap from 54.31, essentially down to 5,400. So if we do penetrate that gap, that's a possibility for fill. But 5,400 is going to be major support yet again today. Now, it is technically not the put wall that did shift lower to 5,300. Nonetheless, this is pretty critical. It is essentially the weekly low now. It is yesterday's low. The 5-day implied move, so 1 sigma is 53.99. And I believe if we look at the higher time frames here, let's just pop to the daily. We do have the 50 daily moving average in this range. So it is most certainly a confluence point, right, where you got a lot of variables, a lot of levels meet. So it's not surprising we're seeing that hold. And, we were buyers off that yesterday in the morning for a massive move to the upside. Now, I just want to touch on my rules when it comes to 0DTE options trading. I only have two. Number one, never trade credits in a gap zone. This is because when you penetrate a gap, there is a high probability of fill, particularly on gaps less than 0.5%. Additionally, it is a low liquidity zone, so price can move with relatively high velocity. So if there is a gap and go type setup, I generally opt for a different strategy, such as long calls or a call butterfly spread, such as today. The second rule is to never trade counter to large moves in implied volatility, and this holds more true when we're trading below the flip in negative gamma. This is because dealers are essentially chasing deltas. They sell weakness and they buy strength, exacerbating price moves. And implied volatility is a major variable in option pricing and exacerbates these sell and buy flows. In short, IV down equals buy flows, IV up equals sell flows. And to measure implied volatility, I'm simply looking at the VIX on an intraday basis, and I'm trying to align myself with that larger move. Because when you're below the flip in negative gamma, volatility is much more likely to trend for an extended period, and essentially exacerbating these price swings in the S&P. So let's take today, for example. We have the VIX overlaid in orange. VIX opened down 0.7%. This is a bullish indication, bullish for the equity, and we would make the assumption that it's going to continue to trend lower and invoke buy flows supporting the upsides. So I definitely recommend adopting this rule. Never trade counter to large moves in implied volatility. It will save you getting caught in a squeeze, such as we saw on Thursday, and will prevent you from getting caught in these risk-off sell-offs as we saw on Wednesday. Taking a look at our gamma chart, starting from the top, the gamma index is materially negative, 1.2 billion, although this is probably headed closer to that zero line given the rally here thus far. That transition from negative to positive is the flip at 54.95. You can see all strikes below negative, that is destabilizing for the market price. All strikes above positive, which is supportive for the market price. So if bulls can get a close above that flip, we start to see a couple days of positive gamma, we will be back into that buy the dip regime and the market should start to stabilize once again. But as long as we hold below that flip, the bears are technically in control and we could see a lot more volatility. Let's conduct a quick performance check. I trade the S&P 500 0DTE options. And year to date, I'm up $148,000, taking a total of 282 trades, 224 winners, 50 losers, 8 flat, for a win rate of 79%, a nice steady linear P&L curve. This is my personal trade log, although all these trades are posted within our Discord server or traded on live stream. So if you are a member, you do get the opportunity to trade alongside me. And I trade a combination of option strategies, the long butterfly, which is a low risk, high reward strategy. This was yesterday's trade where we opened the trade for $45, closed for $180 for a return on investment of 300%. And this was a 25-minute trade near the end of day. So very low risk, high reward potential. Additionally, I trade credit spreads, which is oftentimes regarded as a high probability trade. You can make money if the market moves in your favor, if the market moves sideways, or even moves against you a little bit. Additionally, I like single options, long puts, long calls, and they can be very profitable under the right conditions. You can get some gains such as 300% ROI, 450% ROI. Now, of course, we have losses, but the way we time our entries, we can know quite quickly if we're wrong, and that could allow us to cut for a small loss or to hedge. So though we do have losers, they are relatively small compared to our winners, and that holds true regardless of the option strategy. Now, if you would like to learn these 3 option strategies, the long butterfly, credit spreads, single options, and how our traders use these to generate consistent profits with 0DTE options, as well, if you want to learn a repeatable process to show you how to trade these strategies effectively, we have a special offer for you. Receive 20% off our quarterly subscription with the code OPTIONS20 at checkout. Simply go to the link in the description or 0DTEtraders.com. This offer is available to first timers only and is in limited quantity. Hope to have you on the team.